After countless hours of backtesting, live trading, and marking up a bunch of trade executions, I've finally discovered something that's going to allow me to have a better and more accurate system to allow me to get a payout and more payouts after that. And the thing I'm talking about, the secret, is basically just being patient with my entries. What you're going to notice in this video is that I point out some trades to where we may bounce off a key level, but we just tag it and then go right away versus what it looks like whenever we tag the key level, consolidate at that key level, and then we go. You're going to notice which one is better and why and what it looks like and how this can actually help me. So I want to implement this discretion into my trading, but first, I kind of want you guys to see it for yourselves. So with no further ado, let's jump into the review from this past week so you can learn and see exactly what I'm talking about. All right, so just going over this week, we finished the week off with a 63% win rate. We lost 4 trades and won a total of 7 trades, but I do think this week could have been a lot better. In the blue, we have the trades that I actually took, but in the yellow are the links to the trades at the end of the day that are marked up that I should have definitely been in. And starting off with the trade I took on Monday, we're going to see that on the 15-minute time frame on the left side, we are above the week to date view app, the start of week view app. We are above the session view app and the previous is New York view app. And we're kind of in alignment with the New York view app. Whenever longs are just kind of this easy, I mean, you can just take them effortlessly. The only tricky thing here is where we should take profits. Now, we see buyers stepping in where they need to, which is right here down at the daily and also the previous is New York. And we see on their lower time frame, on the 2-minute, we see higher lows being built. We have a higher low here, another high low, another high low. Off that third high low, after I see buyers kind of step in, and the sign that I like to see is that I like to see some type of like sideways movement for a little bit of consolidation at these key levels, telling me that buyers are stepping in, slowing sellers down, and they may be ready to kind of like flip and take the price into the opposite direction. So that's my criteria to kind of get in. We fail to kind of make a new high off this swing high. We come back down, back in a drawdown, but we see buyers defend this area and step back in once again. And then here we're going to see that price does break this high, but we're unable to break outside the opening range. And this is where I needed to be a lot better at taking profits. And as soon as I see that we are kind of just like struggling to kind of break above the ceiling, and also just looking at the 15-minute chart leading into this open, price was kind of sideways this day. So I just need to be willing to take trades a lot more aggressively, especially if it's already noon and we're still trading within the opening range. I got into this trade right before 11 o'clock, and then an hour later, we're still trading inside the opening range. So therefore, whenever we do get up to this opening range high, I need to take profits there. If it breaks out or breaks out, but at the same time, I know because we're trading within this range still, I need to be willing to take profits a bit more aggressively there. But I still took profits once we closed it back down below the 21 EMA, but I do need to be a bit quicker in that regard. And then let's look over to the 2 trades that I think I should have been in. And again, we look at the left side on the 15-minute chart. It does kind of, we do kind of get a bit more of a clear picture here on this markup because the 15-minute chart is a bit zoomed in. And we're going to see that buyers stepped in around, overnight. And then we broke out above the daily. You made a higher low, came back up, came back down, retested the daily, and we found buyers here. And as soon as we kind of see price, again, just moving sideways, we're seeing buyers step in. This is a good sign to kind of get in long and to try to take this price higher. A good argument could be made to where we could literally just maybe try to get as close to a price to the New York as possible, which I marked up, and that's kind of like my goal when taking these trades and just going for that clear 1-to-1. This is the most relevant pivot. It aligns perfectly up with like this kind of pivot right here. So if anything, if our stop dips below this pivot right here and also ATR, then why would we still want to be in this trade? And this trade actually does become a winner just because, again, we're looking at structure. We're seeing these higher lows being built. We see where the bulls are stepping in and it makes sense. Obviously, you may think that this is a higher low, this is a higher low, but these are just kind of like mini swings in the big picture that's happening. And if we're looking at we just broke out of the daily, we're going to need a pullback. This isn't a pullback to the daily. This isn't a pullback to the daily. This is our necessary pullback to the daily for buyers really to gather strength and kind of drag price further up. And then let's look at the second trade that I should have taken on this day. And then again, with the second trade I should have taken on this day, we are covering the previous pivot. But in all honesty, I would, after reflecting on this, even though price action turned out to be ugly, I know the safest thing would be for me to not place my stop here because again, this low can just get wicked out, but and rather put my stop at a safer pivot, which is this pivot right here. Because this is the most recent pivot, but this is the previous pivot. This is the solidified pivot. So I should definitely have my stop down here. And just depending on, how this day ended, I might have taken out profit on this trade, or I might have sat in this trade for a couple hours and then eventually just took out profit at equal highs. Who knows? But again, that's my thinking about this trade right here. So on Monday, I mean, we ended the Monday green. I did mark up two trades. This trade and let's see, this trade right here are the same exact trades that I was in. So the trade that I should have taken, I was in. So I can't really complain about that. I just have to definitely argue about my trade management and just being willing to take profit and not be so desperate to catch a nice big move. And then vice versa here. This is another trade that I actually did take on Tuesday. I took two trades on Tuesday. And with this trade, I mean, we're clearly seeing that on the 1 hour chart, this was a very nice higher low to continue the trend higher. And that's why I marked it off on the 15-minute chart on the left side as higher low reversal question mark, because I wanted to pay attention to where if we had market structure shift here, then we can definitely start building some higher highs and higher lows, and that's kind of what we do here. If we look at the 15-minute chart, if we qualify this as a lower high right here, we have a lower low and then a lower high because buyers stepped in, brought us all the way back up. With this candle right here, we broke that bearish structure. So we can kind of look at this as some type of market structure shift. And it's kind of more solidified after we farm a higher low here. And then from here, we break out above the week to day VWAP, the previous day's New York VWAP, which is the yellow VWAP right here, and the start of the futures session white dotted VWAP right here. We broke out above it, came back down and retested it. Now, here is what qualifies me to take a trade in the open. And if and only if we get a nice breakout and retest of the uh, session view up, whenever view ups align just perfectly like this, we have all view ups below us, we see the bullish structure, that is what justifies for me to take a trade in the open. And so that's what I did. I did exactly that. Right before the open, I got into a long position because again, we just saw the nice sideways action, telling me that buyers are defending this key level and they're holding it. So I got in. We sat in this trade for a while. I mean, we kind of just grinded up higher. And then eventually, once I saw that price kind of came at a somewhat of a standstill, we did find buyers right here. But again, you can just see the hesitation. It's not like buyers are super in control just because of how stacked these bars are. We had some sideways action, a small push higher, sideways action, a push higher, and then kind of like trickling back down. I'm gonna go ahead and take my profits, get out of the trade, and lock in my profit. I think I managed that trade fairly well. And then the second trade I took, which is later on in the afternoon, was honestly a beautiful trade. Like it was one of the easiest trades I've taken in a very long time. And this was one of this is honestly some of the best price action we've had in a very long time as well, because of how clear buyers stepped in, and you can clearly identify where buyers stepped in. If we look at the left side, we broke out above the daily. We hopped in that first trade of the first higher low, and then guess what? We came up, came back down, and it seemed like with these two bars, we're gonna push lower, but no. If we look at the 15-minute, look at that nice bullish pin right there, dude. That's crazy, and that's a crazy sign that buyers are in. So therefore, buyer stepped in right here. And then for the third time, we can definitely expect buyers to step in here once again. So again, we look at the 2-minute chart on the right side. We're going to see that thing that we love to see, to where buyers step in, sellers pull price back. But then look at this consolidation right here, telling us that how well buyers are defending this area. And then, so based off that, I wanted to confirm that buyers were in by taking the high of day anchored view app breakout. And that's exactly what I did. We broke out, consolidated here. Sellers tried to take price back lower, but buyers said, nope, we're going higher. And so as soon as I saw this push with this candle, I got in. And then it was just literally, I was in the trade for like a good 10 minutes. And then that's it. See, 2, 4, 6, 8, 10, 12. 14, 16. So 16 minutes, right? In 16 minutes, that's like one 15-minute candle right there. We were able to make our profit, and we were up pretty green on that day. And so on Tuesday was one of my best days this week. And honestly, just because of the quality of trades I took, and honestly, my trade management on those trades were far better than what we just saw on Monday. And then let's go over the trades that I should have taken again, which is now we have a bit more clarity as to what I was seeing, right? We see that after price broke out, price is just consolidating here. It is consolidating, and we see buyers step in. That was a weird sound. We see buyers step in where they needed to step in. And based off of that, I can get in long pretty much anywhere here. The goal here is not to get in long all the way up here from a high price. We want to kind of get in long, get in a price as close to the daily as humanly possible. And that's something I'm trying to work on. But of course, I'm making these markups realistically off based off what I would have realistically taken. But I am trying to kind of get better prices, try to get better fills. So that is something I need to work on. But again, it's still, we see the higher lows being built on the 15-minute. Bulls are stepping back in. We break up back above key VWAPs. We hold them. We get in long, and that's the only time I will ever take a trade in the open. And then here's another trade that I would have definitely taken, but it just didn't win, right? We can't win every single trade, and that's totally fine. So we continue to see the bull step in. We get a nice pullback to the New York, and it consolidates for a little bit, and it looks like it's going to work out, but it doesn't. We just get sellers out of nowhere. We dump. And then after that dump, we can always get right back in as soon as we close above the key view apps. And then we see that pin on the 15-minute chart. As soon as we see that pin of buyers just stepping in so wildly like that, then we can go ahead and get in long. And then again, just go for our 1R. And then the next trade that we should have taken, that's the same. Nope, that's not the same trade. And then the next trade yeah, that is the same trade. And then the next trade we should have taken is this trade, which is a trade that we already did take. Again, here you can get in off the closures above these key view apps after, again, we see that nice pin of buyers stepping in where they really need to step in, and then we can just get in once we actually do see that we close above the New York anchored view app. You can definitely get in early here, especially after seeing this pin, and then right after this 15-minute candle closure happens, you can probably get like a bit of a better price. But again, this is a great price. This is waiting for that confirmation that buyers are actually in, because we see that, hey, for at least half of this 15-minute bar, maybe, we saw buyers step in. And then for 15 minutes, buyers were able to hold this key level. And then after that, we can go and get in. We can look at the 2-minute chart and look for execution. And then so those were the trades on Tuesday. So Tuesday, honestly, I'm not gonna lie, is like was one of my best days for this week, because again, the quality setups I took and how I manage those setups, it was a very effortless day. It was a very easy day. And I'm working towards to try to make every single day like that. Even though price action may not be as clear, I don't want to make it hard for myself. And I feel like I did that on Wednesday. I was kind of a bit too antsy, rather than waiting for the nice consolidation, the sideways movement for buyers to show me that they're stepping in here on the 15-minute chart. I kind of got in a bit early. If we look at here, we only have 2, 4, 6, 8 minutes worth of price action of price holding here. And then again, we get faked out. It's not a terrible trade. It's just definitely, I'm learning the more I take these trades and the more I mark up these trades, I'm definitely learning it may be better to just be a bit more patient and just wait for these trades and not be so fearful of it. Oh, what if it just taps and then goes without me? Because again, we could always just, if it does run and go without us, then we can always just get in on the next higher low. It's no big deal. But again, the point still stands. We're above the week to date VWAP. We're above the previous day's New York VWAP, and we're also above the daily VWAP. We just made a higher high here. We can make a higher low anywhere around here. So let's just see again. That's the first trade I took, which was a loss. But then after we do consolidate here for a bit, for 2, 4, 6, 8, 10, 12, 16. Oh, wait, that just, yeah, 2, 4, 6, 8, 10, 12, 14, 16, 18, right? 20. Like once we see here, like we're sitting here, we're holding this for like 20 minutes. Anything more than 15 minutes, and we're holding a level, anything more than 15 minutes, I mean, that's kind of good. So I'm learning that if we're able to consolidate at a key level for about 15 minutes, that's a good sign that we're defending this area and we can continue going into the proper direction that we wanted to. But also, the mistake I want to point out is that my stop loss on this second trade was perfect, covering the recent higher low because we don't know if this is the actual higher low. And notice what I've had my stop loss on the first trade. My stop loss on the first trade was just stupid. We're not covering any type of structure. Again, if we break this higher low, then we do want to kind of like be on pause real quick for the longs. But I'm just kind of putting my stop loss at a random place. And guess what? I get ticked out and then it just continues without me. And then well, it doesn't I do catch the trade, but look, it stops right here at 36. So it's just I put my stop loss right at the place where price starts to reverse, which is not a good feeling. But again, I would have never taken that first initial loss if my stop loss placement was better. And where should my stop loss placement have been? Down at the 32s, covering these higher lows right here that we see. And yeah, we would have not taken a loss today and we would have been up very much big green on that day. So going over the trades that I definitely should have taken on Wednesday. Again, the first trade is just being patient, waiting for buyers to show me that they're truly defending this area, but also make sure our stop losses are at places to where it makes sense. Down at the 32s makes sense, and then I can easily go for that 1R. But obviously on this markup, I have not stopped down at this recent pivot. But again, the more I make these markups, dude, the more I like putting my stops down at previous pivots. But let's say prices all the way up here and we're very far away from our previous pivot. So then I just use the ATR calculator right here. That's basically calculating the average to range from the last 14 bars. And I'll just do that. But again, we look at the second trade. Again, after taking this really nice trade right here, we do get a nice pullback to the daily view app. And again, we have one bullish bar right here, and then I mark it up to go long. But I have to apply that rule of like, okay, are we consolidating here? Are we just kind of getting pumped out? Are we just gonna like, are buyers just stepping in temporarily just to make a lower high and then we're gonna continue lower like we see here? That is a big possibility. So that's why it's really important for me to try to focus on that rule of like, I want to see a level holding for at least on average 15 minutes, maybe a little under 15 minutes, maybe a little over 15 minutes, just depending on the day, depending on my discretion. But that is something I learned, especially if we're just kind of like touching and going. I really want to see that consolidation, that nice sideways consolidation, right? Like for example, here we break out above the New York View app, we consolidate for 2, 4, 6, 8, 10, 12, 14, 16. Like that's 50. That meets my rule. And then you can get off of the break and retest of the New York View app, stop right here at the previous pivot, and then get that nice trade. But again, here we just tap it with 1 2-minute bar and then we kind of go. Trades like that tend to not work out. Sometimes they do. But on average, I just notice I get burnt a lot of the times whenever I do try to take those trades. Now, for the third trade that I definitely should have taken, right? And just looking at this trade as well, I probably shouldn't have taken that, but it was a good markup to have. And it's a good talking point for this video. But a good trade that I definitely should have taken. And especially why? Because we see buyer step in here. We see it at the first contact candle we have with this bar is right with this level where the previous day's New York View up is right here. And again, we see the buyer stepping in with this bearish wick right here, with this bearish 15-minute bar. We see the nice bullish wick, and then we get a nice 15-minute bar print showing us that we definitely have more than 15 minutes worth of bullish price action right here to where we can go long. 2, 4, 6, 8, 10, 12, 14, 16, right? For 16 minutes, we're kind of consolidating, consistently touching the previous days in New York, but we're having buyers step in here to drag price higher. And so it just looks really nice. And then so you can definitely get in as we start to kind of get this lift. And then again, you're just kind of going for that 1-to-1. With this one, it is a bit tricky because I'm getting in here. My stop does match up with ATR and the most recent pivot. With trades like this, it is just tricky because we don't have any recent pivots to go off of. So therefore, I'm trusting in ATR and I'm just expanding on this like strategy with my stop losses. But that was Wednesday. Wednesday definitely could have been a much better day. My main mistake on Wednesday was my stop loss was just really crappy. But again, the entries were not bad. And then going into Thursday, which was an awesome day, we definitely could have and maybe should have taken a trade right here out the New York View app, especially seeing how nice we consolidate here. We break above retest the daily VWAP right here with this pin. And as soon as we kind of like break out of the New York VWAP, come back down and retest it. We consolidate here for a little bit. 2, 4, 6, 8, 10, 14, right? After that 14-minute candle, then we can be like, okay, let's go ahead and get in, right? Or anywhere around here. We have our stops down here. And then again, we just take that. The reason why I did not jump into a trade is because of the resistance we potentially could find above us, which is the week to day VWAP, the previous day's New York VWAP, and also this news anchored VWAP that I had up here. So trading into those VWAPs is kind of scary, but at the same time, if we have not yet touched or rejected those VWAPs, I should be comfortable longing into those areas. But once we are actually at those areas, I should either cover my profits and go risk free, or I should just take my profits, being cautious, knowing that sellers could step in here and we could highly reject this level. Now, obviously, once we break out above these VWAPs and buyers are confirmed because we ripped through these VWAPs, I want to get in off the next higher low, and that's exactly what I do. I just, again, I got in a bit too early. And this is where I really want to practice on applying that rule of waiting for a level to hold closer to 15 minutes if I can. Looking at the 15-minute chart, we can see how well buyers are stepping in with just these bullish pins. But again, the first contact 2-minute candles right here. So we have 2, 4, 6, 8, 10. I got on off a bit too early, right? I definitely could have definitely gotten a better price right here, which would have just made more sense for my risk to reward ratio. And I also could have, been in and out of this trade a lot easier, maybe. Who knows, right? But again, I really want to practice on getting better fills, like closer to the New York View app. I'm getting in off the bounce of the New York View app, so I want to get in as close as possible to this level. But I want to get in after I see that, hey, buyers are actually defending this level and stepping in with patience. But again, nonetheless, it was a great trade, right? My fill is I'm being picky, but I'm trying to be picky so that way I can improve my executions and improve my system. But at the same time, it was a great trade. I'm taking the bounce off the New York View up. We see buyers stepping here with such a strong candle. We see buyers defending this area as we can read through my notes. We're liking how buyers are stepping in where they need to, and then eventually we get filled, getting our 1-to-1 and getting out. That's a great trade. So Thursday is the second best day, honestly, of this week. And then looking at the trades that I think I should have taken was again after we broke out above the previous day, the start of the session VWAP, which is the white dotted VWAP here, and we pulled back to it after closing back above the New York VWAP. We could take the New York breakout. That's a very viable trade that I can take, and I do like to take, especially when we have the daily anchored VWAP below us as support. And then again, we could also take the retest of the New York View app. So after we break out, we consolidate here, and then we can literally just kind of count this as a retest, especially because price touched it here, and we're considering continuously consolidating. We can definitely get in, but again, the risk to reward definitely does have to make sense. If our stop loss is down here, then we need to be able to get that 1-to-1. But with the previous days in New York being so close, who knows if we actually get that 1-to-1? I think we actually do because, yeah, we marked it up. We do get that 1-to-1, but in certain scenarios, we may not get that 1-to-1. So in certain scenarios, possibly won't take that trade. And then again, going over the trade that I took, but with just a bit of a tighter stop. Same trade. I took this trade. I was in that trade. I just wanted to mark it up with a tighter stop. And then I marked up another one, just having a bit of a more forgiving stop as well. And again, even though we're in this trade for longer, eventually it does get filled. So Thursday was a great day as well. It was honestly my second best day, but Tuesday was definitely chef's kiss just because of how quickly uh the trades worked out, how stress free they kind of were, and yeah, and just how clean and honestly the day was in my opinion. Now going over Friday, Friday was definitely it was an interesting day, and I was definitely off, to say the least, on Friday. And the reason why I say that is because I am marrying the shorts like so hard to where I'm just completely ignoring that the relevant trend right now is that we're making higher highs and higher lows. The relevant thing right now that I should be trading is that buyers are in control. So with that being said, I shouldn't be so tunnel visioned and going short. I avoid taking this short right here because I see buyers step in at the daily off the New York View app. But then as soon as I see a 2-minute candle print here, I decide to pick the top and bet that price is going to reject the previous day's New York And then from here, we want to kind of move lower. I'm picking my top and I pay for it, you know? And price gives me a lot of opportunity to cut this trade and get out of this trade because I knew I was wrong. But I was just so stubborn thinking that I was right in picking the top, which I never do. Like I rarely ever do pick the top. Friday was definitely like one of my worst trading days I've had in such a long time. And then this led to kind of a downhill effect to where I then started taking like random trades. Again, just a breakout here from a handoff VWAP, which I never do, and then taking a short to try to rake back a loss. Like just going on tilt, and then one more trade to kind of lose it all. This is the New York VWAP. I painted it yellow because I marked this up at the end of the day. But after we reject the week to day VWAP, then I can see sellers start to step in because now we're seeing a structure shift. And this is an area to where it makes sense for sellers to step in. So for me to kind of get along here was definitely a foolish thing. And you can definitely tell like I wasn't thinking clearly because just looking at the overall trend, the short term trend, yes, bulls were in play, but once we got to the week to day VWAP, which is a common place where price, if we're in an uptrend, likes to form higher lows, or if we're in a downtrend, likes to form lower highs. After we just form this lower high right here, I'm then trying to get in long off the pullback, thinking that we're gonna just continue to trend higher and rip through this level, especially after of how strongly we've seen sellers defend this area. That's not how I should trade. If I wanted to look for longs, then price needs to break out above this level, like totally disrespect it, come back down, retest. Then once we rip through it, then I can feel confident to get in longs because buyers were absent here previously. But because they were present here after rejecting this level so strongly, I should not be so willing to take a long, even though on the lower time frame I may be getting induced to taking it. Now, the two trades that I should have been in on this day was trade number one, which is basically after we bounce off of the daily VWAP. So we found buyers here. After we print this bullish candle, I could then kind of get in long around anywhere around here off the candle closure of the 21 EMA. But again, it is a very tricky trade. It's not the most obvious trade, but you can look at this as a mini higher low, and as soon as you kind of like see this nice little higher low, you can definitely get in long. It's just very tricky because on the lower time frame, this is the current day's New York VWAP, and we're rejecting it. It looks like we're just forming a lower high. So it's really tricky. Like this is a very tricky day. And this is definitely a day to where mistakes will be made if you have the wrong bias. And then the second trade I should have been in was, again, I could be playing the rejection off of the week to day VWAP because I know this is a common area to where sellers like to step in. And as soon as we see this sideways action consolidation, I could get in short anywhere around here and then again get my nice 1R. But again, this is one of those days to where you have two trends working out this day. First, we have the morning where the bulls are in control. Then after we reject the week to day view app, that buys flips and then bears take over. And then for the rest of the day, take us even lower. So it's definitely one of those tricky days. It's definitely one of those tricky days. But that was my week. It wasn't a terrible week. I would definitely say, looking back at Monday, I could have had better trade management. Wednesday, no excuses. My stop loss was just absolutely stupid. And then Friday, it was a very tricky day to read price action, but at the same time, I was so married to a certain type of bias, ignoring what the relevant trend was. I knew that sellers could easily step in right here at the week to day view app. But until we get there and until we see that price rejects it, I need to follow the trend that's happening right now, which is forming lower lows. Higher lows and higher highs. We're trending up, and we can just look at this as a big picture that we're just making a pullback on the downtrend. We're moving down, but yet we can definitely pull back to the upside and then reject once we get to a key level. But I need to ride these little waves, not just solely marry one side. And if I am just marrying that one side, I need to understand where shorts are most likely to work out. And I know that shorts are most likely to work out here at the weeks to day view app after buyers have shown me that they are done pulling back and that we're ready to continue the downtrend that we've been in for the last week or a couple days. But that was my week. And from here, the reason why I do these weekly reviews is because it really helps me get to where I need to be as a trader. And it's just going to help me refine and just kind of tweak my system so that way I have a profitable accurate trading system to where I can consistently follow. That'll allow me to make a ton of money in the stock market. Now, if you enjoyed this video and you want to see more videos, please check out this next video, and I'll catch you guys in another one.